Primary objectives of the IFRS Conceptual Framework. In the context of International Financial Reporting Standards, IFRS, the conceptual framework plays a crucial role in guiding the development and application of accounting standards. The IFRS conceptual framework provides a set of concepts, principles, and objectives that shape the preparation and presentation of financial statements. The primary objectives of the IFRS conceptual framework are to 1. Provide useful information. The framework aims to ensure that financial statements provide relevant, reliable, comparable, and understandable information to users. It emphasizes the importance of decision usefulness and meeting the needs of various stakeholders. 2. Enhance comparability and consistency. The framework promotes consistency in the application of accounting standards across different entities and jurisdictions. It provides guidance on the selection and application of accounting policies to improve comparability of financial information. 3. Promote transparency and accountability. The framework seeks to enhance the transparency of financial reporting by requiring clear and comprehensive disclosures. It emphasizes the importance of faithful representation, neutrality, and the avoidance of bias in financial statements. 4. Facilitate decision-making. The framework aims to assist users of financial statements in making informed economic decisions. It provides guidance on the recognition, measurement, presentation, and disclosure of financial information to improve decision-making capabilities. Thank you for watching.